The White House is reportedly pushing to make more home loans available to people who have weaker credit. That's according to today's Washington Post. That report says housing officials, including the Federal Housing Authority, are encouraging lenders to be more subjective in loan approvals, taking into consideration, for example, a borrower's savings. And the Post says the administration also wants to make it easier for people to refinance. While the FHA would not comment, we want to dig deeper on this. Joining us with their take, Michael Barr. He is former Assistant Treasury Secretary and is currently a professor at the University of Michigan Law School, and Joe LaVorgna, Chief US Economist at Deutsche Bank. Welcome, gentlemen.
Thank you.
Michael, let me start with you. As I understand it, you are generally in favor of this with some exceptions. Detail how you would find this a good plan.
Well, I think the important thing is to get the balance right. Nobody wants to go back to the irresponsible lending of the last decade that really crushed the American economy. The problem now is that credit has gotten very, very tight, and there may be room to find creditworthy borrowers in a larger pool. So at least as I understand it, what the Housing Administration is talking about is providing clarity to lenders about the rules under which they'd put back mortgages in the event of future default. And I think clarity and transparency on that is good. And then secondly, to make sure that the loans that are being guaranteed by FHA are reaching borrowers who have good, strong credit, but who may not fit the existing parameters fully. And so I think getting the balance right is important. Nobody wants to go back to the decade of excess that we're finally coming out of today.
Joe, you're a little bit skeptical. Why?
I think, Taylor, a few things. One, rates, part of it is banks have been not willing to lend in part because of all the litigation and also regulatory issues that they face. So it's not necessarily they're tight for good reasons. And I think as they're trying to figure out what their capital needs are, having perhaps finally gotten past the mortgage putback, banks are probably going to be more in a mood to lend. We have seen the Senior Loan Officer Survey, for example, show a couple of quarters in which prime mortgages are seeing some easing of standards. We're also starting to see a little bit less tightening on the non-traditional mortgages, of which some of these people obviously would be a part of. But I think part of it, Tyler, is this has just been a very deep problem of economic recovery. And I would argue that as home prices continue to improve, the system effectively is healing itself and will do okay. And I think, as we've learned, we don't want home ownership rates up around 68, 69%. They probably belong in the low 60s. And therefore, the people who aren't getting access to credit maybe are generally the ones that aren't supposed to have access to credit. So, again, I think the system is healing on its own at this point. I will leave well enough alone. And as some of these rules get codified for banks, I think they'll be more in the mood to lend.
Michael, though, the trickle-down effect when someone is able to get a home loan and is able to buy a home, the trickle-down effect into the economy can be quite significant.
Yes, I think if you go back and look at what the administration has been doing over these last few years, it's really been quite an important effort in bringing back the housing recovery that your guest was describing. Today, Fannie Mae, Freddie Mac, under conservatorship, the Federal Housing Administration together account for most mortgage lending in the country. And so really it's that effort, the effort to get people a chance to refinance their homes. People who are underwater and not able to access today's mortgage rates, getting them into the system so that they can refinance their home. They've been paying on time, but they need access to those lower rates. And providing clarity of the kind that is necessary on putback risk and on the rules of the game going forward, I think are all critical. And to my mind, that's the path the administration has been on for quite some time, and it's bearing fruit today with improvements in the housing sector that are really quite significant.
You know, Michael, I'd like to stick with you and get you to react to sort of the spirit of what Joe LaVorgna was saying there, that maybe we don't need to have home ownership rates in the high 60%, but maybe in the low 60%. And as I read the Washington Post's reporting, and I can't necessarily vouch for it, but I think they're usually pretty good on these kinds of things, they say that the FHA, you can get an FHA loan with a credit score as low as 500 and put just 3.5% down. Does that strike you as responsible, given the fact that ultimately the taxpayer could be on the hook if somebody defaults?
I think that's exactly the right question, and getting the balance right is critical. If you look at who's getting FHA loans now, it's nowhere near the numbers that you described. I think the average FICO score for an FHA loan today is around 700. So really the question is there room to expand among a slightly larger group of creditworthy borrowers? I think going to no-doc loans or no-income loans of the kind that the financial sector engaged in over the last decade would be a huge mistake, and I don't take that to be anything close to what anybody is proposing. So the key is getting the balance right. The credit conditions right now are probably tighter than they need to be. How do you get them organized moving forward? Through better programs for refinancing, through greater clarity of the rules of the game going forward of the kind that FHA is describing, and further movement by Fannie Mae and Freddie Mac to refinance and modify mortgages that are out there already.
Gentlemen, we'll leave it there. Michael, Joe, thank you both very much.